Oh, I can't believe this. This is what I mean when I say I don't care who somebody is. This person's in Congress and they're fucking stupid. Yesterday, we did a very popular video on the Senate meeting with Powell and all the senators. If you didn't watch it, please make sure you watch after this. It got a lot of great reactions. Powell just kept saying the same thing. Their mandate is pricing, which is inflation, essentially, and full employment. And full employment is 5 to 6%, somewhere around there. And, he kept getting attacked, I thought, unfairly about how people have to lose jobs for them to get there to their inflation goal. And Powell, I think, did a great job of saying, listen, yes, that'll suck for people who lose their jobs, but it'll suck for everyone if we have continued 5 or 6% inflation. So today, he was in front of the House to talk, and I'm sure his message is probably pretty similar, but we're going to do a little reaction to a few things he said. So here we go.
Employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell.
Oh, this guy. Look at this.
I'll recognize myself for 5 minutes for the purposes of the question. Chairman Powell, there's been a lot of discussion over the last 24 hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up. Open markets.
Oh, he's going to ask.
In 2 weeks.
He's going to ask.
How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen, having been sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week.
So the reason these are important is if if jobs come in strong on Friday, if CPI and all these things come in strong, he realizes there's going to be an issue with inflation. His goal is to temper those markets down. When we have strong jobs, it leads to increased wages, which leads to increased costs of goods and services. That is inflation. So in the past, we love good job reports. We love all these things because, oh, that's great. Everybody's making more money. When you don't have inflation, oh, this is great. Everybody's happier, blah, blah, blah. In this situation, the exact opposite's happening. They want a more tempered jobs report. They want CPI and PPI to be much lower. Let's continue on.
Important, and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation.
The higher readings we've seen recently. I mean, there's a lot. Right now, I think I read somewhere today that there's 75% chance the Fed raises by 50 basis points, which is 0.5%, which, they only raised by 0.25 last time. If I'm a betting person, I'm betting higher than 75% chance it comes in at 0.5. Only because they only raised 0.25 last time. I just think they were just giving everybody a chance to kind of like, oh, let's simmer down here. Maybe we don't raise as fast. So that's my take.
Down, and we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. Larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
All right, so what he's saying there is we don't have this end result. We are going to react to data. So if hypothetically unemployment goes to 6% tomorrow, inflation drops to 2%, they're done. That's what he's saying right there. We are not, and that's what I try to encourage everybody to do when it comes to analyzing a company. Unless your data changes materially, you keep the same path. Companies are going to have ups and downs, up and down. But unless, if you're banking on, and the fastest thing to change in a company is price. So a stock you can hate at 100 and love it at 50 if you think it's worth 70, right? The only thing that's changed is the price. Same thing here. He's sitting there saying, hey, what are the prices out there for goods and services? If they're down a lot, I'm good. And they had a good end of the year last year. Inflation was very low, if non-existent, basically, at one point. So, all right, let's see what else this McHenry nerd has to say.
But you've also said higher longer. Is that still the case?
Higher longer.
Yeah, so, as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending.
Again, guys, think about this for a second. Very strong employment report, very strong consumer spending. In any other time, people are excited about this. But this is actually causing problems for people because they know that means that inflation's higher and people are going to want to, and the Fed's going to want to increase rates even further to combat that.
Strong manufacturing data right across the board. As I pointed out, some of that may have been affected by very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bulletin. This is SAB 121, I think, and
that's right.
Certainly aware of it, and we do follow general accepted accounting principles in our capital regulation.
Okay. Well, without objection, I'll submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done.
Wait, I'm confused. I actually don't even understand what he was saying there. But either way, one thing that's interesting I find is there's a lot more questions being asked here. So I don't know. I didn't watch this whole thing. I don't really care about watching all these things, but I don't hear as much, talking from the mountaintop here so far. I don't even know who this McHenry guy is. So shows how much I really pay attention. But
I think I speak for the chairman as well. Would love to have more dialogue with the Fed on that, and maybe bring in the folks from MIT as well, and just make sure that Congress and this committee is
MIT
as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that
here we go.
Continue to cite the need for faster payments.
Here we go.
However, as was earlier mentioned, the Fed Now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts. And the Fed has a target release date for Fed Now between May and July, which is right around the corner. Do you see any reason why cryptocurrencies would provide faster payments than the Fed Now system? And would this offer, with the transparency of Fed Now, would it offer distinct advantages over some of these stable coins that are touting faster payments?
What Fed Now will do is it will enable all the banks, any bank in the United States, not just the big ones, to offer instantly available funds and real-time payments to their customers. That's what it will do. That's a great thing. A CBDC, I think you're asking whether a CBDC would serve some of that, but a CBDC is going to be years in the evaluation, and I think we can get this into the hands of the public very quickly, and I think we'll have real-time payments in this country very, very soon, and so that's a good thing.
It is. I do have an overriding question, and that is, before the greenback, everybody had their own currency. You had rail companies, you had coal companies, you had, state banks that were authorized to issue their own currency. But when the greenback came out, all of those various currencies went to zero because everyone had, because the greenback had the full faith and credit of the United States behind it. I'm worried about a lot of these stable coins and other cryptocurrencies do they go to zero when?
Oh, he's not
when
going to
we
answer
come up
that.
with the CBDC
He's not going to say yes.
that has the full faith and credit of the United States behind it. And we've got thousands of these out there, and you've got people investing millions.
Powell,
of
please say
dollars
it.
Well, trillions right now.
Please say it.
And I'm
Please
just
say
thinking
it.
If we had those.
Dear Lord, who I
those
love so
advantages
much.
Built into
Please.
CBDC,
Please. On with it, Mr. Lynch.
alternatives go to zero.
Today, Junior.
Transparency and the full faith and credit.
Oh, my God.
We enjoy.
So certainly unbacked cryptocurrencies that don't have any intrinsic value, but nonetheless trade for a positive number. Those I've never understood the valuation of those. Stable coins are actually, many of them are really, they're drawing on the credibility of the dollar. They have dollar-based, they're dollar denominated mainly. They have dollar-based reserves, although we don't know what's in the reserves because there's no regulation.
So, guys, let's get into a little crypto conversation here. All right, so I didn't know that about these different companies before the greenback came. All these companies had their own currency. They went to zero. I can't verify that's true or not because I didn't know that. But think about it this way. If companies, railroad companies that existed that generated income and cash flow and all these things were backing these currencies up, and they still went to zero after the U.S. government came and said, hey, we're backing this greenback right here, what is going to stop any of these other cryptos from not going to zero? I don't understand that these were companies. Like if Microsoft came out and created their own currency, that's going to be way more stable than one of these cryptocurrencies out there. And as he's saying right here, regulation. And the ironic part about all this is all these crypto enthusiasts love crypto because, it avoids regulation. And now they're screaming for regulation. I will say this. I'm going to pull a line from Charlie Munger. If you don't agree with me on cryptocurrency, I'm sorry. You're stupid. I just don't understand it. I just can't understand. Like literally the only people I've seen make any sort of argument for cryptocurrencies are people that I don't think are smart, except for Peter Thiel. And even him, he sold all his Bitcoin, I believe, early this year. And he's a big enthusiast of crypto. I don't understand. And I've said for years, go watch our videos. I said, all it takes is the U.S. government doing one of two things, or one or both of these things, banning crypto or creating their own and saying, all right, we have our own crypto and guess what? It's backed by us. Why the hell would you have any other crypto besides what's backed by the faith of the U.S. government? And I'm a not strict, obviously. I'm a libertarian. And as much as I hate larger government, I sit there and go, yeah, but I'm still going to believe the government more than I'm going to believe something that's backed by this eraser. I don't care. I'm sorry. That's just every single time we buy something, you buy it based on some sort. When you buy a bond from a company, you're putting your faith in that company. When you buy any sort of asset, if you buy an iPhone, you're buying a faith that Apple will back up this. If somebody came out right now and said, hey, I just made the exact same phone, but I'm backing it, and you can pay me $1,000, or you can go buy this one backed by Apple for $1,000. Which one are you going to buy? Hell, if you told me, Paul, here's a $500 iPhone, I'm going to back it myself versus the $1,000 from Apple, I'm going to go buy the Apple iPhone because I'm like, wait a second. I need to make sure that when something goes wrong, I can go find that person. If I can't find Joe Schmo when he's going to back my phone, but I can find Apple, that's worth a lot of money to me. Same thing in crypto. So again, I repeat, and this is going to offend people. If you believe in crypto in its current state, I'm sorry. I'm begging you not to watch our channel because I cannot teach you anything. I cannot teach you a thing. And if you try to tell me that this crypto is better than that crypto, you don't get it, then you are the fool at the table. You're the sucker at the table. I'm sorry. You just are. And crypto will be around for a long time, but not in its current form. Just like internet companies are around today, but not in the form they were 25 years ago. They are around today. They're great. They're the blue chips. They're going to be the blue chip companies of the future, but they're not going to be the zero revenue, multi-billion-dollar corporations that were around 25 years ago. It's no different. It's absolutely no different. All right, this is Mr. Foster now.
Okay, back to economics. So we have this historically low unemployment rate, 3.4%. And historically, this would be considered to drive runaway inflation. Your predecessor Alan Greenspan repeatedly referred to dangerously low levels of unemployment. And yet we see inflation is coming down. So what is going on here? How can we have these historically low levels of unemployment without having inflation take off? Isn't it possible that we simply have less frictional unemployment in our system, due perhaps to the fact that people get their new jobs online and have a job lined up before they quit?
So inflation is coming down, but it's very high is the thing. And some part, I've never said all of it or most of it, but some part of the high inflation that we're experiencing is very likely related to an extremely tight labor market. Wages affect prices and prices affect wages. So I do think that's part of it. More to your point, though, there was a time when there was a tight relationship between inflation and unemployment. In other words, the Phillips curve was steep, and that went away over the period of the great moderation. And really, in our thinking, that's because people came to expect 2% inflation, and we had 2% inflation, and then people just stopped focusing on inflation, and it stayed very low. So there was really no relationship, or very, very tiny relationship. We could have very weak economic growth or very strong economic growth, and we wouldn't have inflation respond very much. That was before the pandemic, though.
Okay, well, I hope you don't overlearn, some of the lessons there. It's one of my worries that there've been a number of exogenous shocks to the system here, and it'll take a while to go through them. And if you want to be careful there. Now, in a related issue, when you say refer to the totality of factors, you're looking at a mixture of leading and lagging indicators when you look at this totality of factors. And my question, if perhaps you might be paying too much attention to the lagging indicators and not enough to the leading indicators. The example that's referenced in your remarks and is in more detail in the report about the difference between using current rental payments versus the amount that you pay for a new rental contract, and difference in how much they lag. Had you paid more attention, for example, to the leading indicators like current rental contracts, then you probably would have picked up inflation earlier. You would have been.
I can't wait for this response.
On that. And secondly, there are policy implications going forward.
How does he sit here through it?
Prices,
Like literally, this guy's like, "Hey, hey, moron! Hey, you just looked at this, and that's funny."
fixing inflation, and that you can take your foot off the brake. And so, what's your thinking on that? And
Yeah,
whether
what is your
you may
thinking,
perhaps be
Romy Rome?
systematically not paying enough attention to leading indicators versus lagging ones?
We've had our eyes on the whole housing inflation thing from the very beginning, and right now, what I would say is that every forecaster is baking in lower rent increases. That's a big part of why people think inflation is going to come down in 2023. I think the thing with transitory was more had to do with goods, and it had to do with the thought that
I forgot about transitory. That was a bad one.
much quicker than they would.
That was a bad one.
Disruptions would go away much quicker than they did, and in hindsight, it just took much longer for those disturbances to go away.
Yeah. So, with hindsight, and if you allow yourself to Monday morning quarterback yourself, you probably would have gone up to 4% earlier, and not had such a big problem with inflation. And so, what is your, are there structural things you can contemplate, or even after action reviews to say what would have happened if we would have paid more attention to the leading indicators, or improve the in engineering term, improve the bandwidth of your feedback regulator?
Mr. Foster.
This is something, if you want to get the best result.
Who is this guy?
You need a high bandwidth.
I used to care about this stuff
in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. Again, we really thought things would. Nobody had seen the supply chains collapse. No one had seen labor force participation plummet. We didn't know, or unemployment go to 14% and higher than that, really.
Yeah, it was higher than
How
that.
long it would take to go away. And if we ever see this pitch again, we'll know how to swing at it. But it's been
We'll now recognize the
pretty bunch of firsts.
gentleman's time has expired. The gentleman, his time has expired.
Okay, so the supply chain thing I get completely. I actually do get that. The hard part is the collapse in the labor force participation rate. And I just view this as the government saying, we're going to pay you $600 a month, $600 a week to stay home. Listen, I believe in a universal basic income. I have this idea for what I call the one tax plan. But it's not enough to somebody stay home. And if they decide to stay home, they don't get any other incentives. This was $600 a week to stay home. I mean, if the average income in this country, that's a huge number. That's a very, very large number. So when I hear this labor participation rate, Powell didn't have it wasn't the one who created the $600 a week thing. But I mean, I just thought to myself, if you're giving people $600 a week, just think about it as a human. If you're a person sitting there and your normal job is going to pay you $800 a week, and they're going to pay you $600 to sit home, but if you leave and go get a job, they're going to take $600 away. What are you going to do? In my universal basic income plan, you get the check no matter what. You want to work, you still get the check. You don't want to work, you get the check. So at least you have an incentive to go work. Oh, I make in mine it's $1,500 to $2,000 a month on the high side, and if you want to go work, great, and you're going to get taxed on the whole thing. Okay, great, go to work. You'll make more money. You'll still get that check. So that's where I look at it going, I don't know if I understand that one or buy that one about the whole labor force participation. Yes, had we seen that before? No, we hadn't, but just think about human nature. The supply chain stuff, I'm sure there's an expert out there about supply chains, but I mean, we are in the business of importing things a lot in our companies, and that was a shock to us. All right, let's go to the next one. All right, so Miss Presley here.
Powell, for joining us today and for your testimony. I'm going to focus my comments and my questions on the high costs that families in my district
Here we go.
are seeing because of your interest rate hikes.
Here we go.
While the
Sounds a lot like yesterday.
Higher interest rates are not the primary driver for the slowing price increases, you continue to raise interest rates.
Yes.
Risking not only millions of jobs, but also a recession.
Yes.
Based on projections from the Fed,
Yes.
approximately 2 million people will lose their jobs.
Yes.
That's 2 million families who will struggle to put food on the table, keep a roof over their heads, and to make.
And if inflation keeps going, you're going to have 100 million families struggling to put food on the table and things like that happening. Keep going, Miss Presley.
Me. But the economic hardship does not end there. Mr. Chair, I would like to request unanimous consent to submit a recent paper by the Federal Reserve Bank of Cleveland titled Post-COVID Inflation
Cleveland, what?
Dynamics into the record.
Without objection.
Chairman Powell, are you familiar with this publication, yes or no?
No, I'm not.
Okay. Well, let me give you some context. The Fed's own economists predict that reaching the 2% inflation goal that you have set will be impossible without causing a recession and spiking the unemployment rate to 7.4%, which translates to millions of working people losing their jobs.
Correct.
Chairman Powell, many economists agree with me when I say that engineering a recession to bring inflation under control is not the right strategy.
Yeah, it's just too general of a statement. You have 5, 6, 7% on inflation. If you're spending $50,000 a year, if a family of 2 people working are making $50,000, $60,000 a year combined, 6% is increasing your cost by $3,000 or $4,000 per year. That affects everybody. That affects business owners like me. You might sit there and say, oh, come on, Paul. Yeah, it affects business owners like me because I got to pay more money and increase more costs, and it's a downward spiral. This is what I have such a problem with so many people who look at economic issues. They look at the first domino, and that's it. I just don't understand how we have a hard time realizing. And, somebody used to work in the company once said to me, I just always thought that you increase minimum wage, everybody makes more money. And then when I explained that, no, that means more cost, and then it makes more sense. Yes, it's going to suck for the billions of people who lose their job, but they haven't lost their job forever. And in fact, one could argue that every single time we have a recession, we come out stronger as a whole. And this is part of the whole dilemma when you have everybody looking out for everybody. As we sort of say, Democrats say the party of we, not the party of me. Well, the problem with the party of we is who's the we care about? She cares about the we of the people in her district. She's saying she cares about the we of the 2 million people, 3 million people, 4 million people are going to lose their jobs. What about the 100 million families who are going to have higher costs? What about the businesses that are going to lay off people because they're like, listen, we've got to be more efficient. We've got to lay off people so we can keep our costs lower. How about that? High inflation still causes job loss. It will still cause job loss. It'll cause a decrease in demand for goods, which will cause businesses to lay people off. This is so short-sighted. I'm sorry.
Especially at a time when we are seeing inflation cool in real time, independent of your rate hikes.
Independent of the rate hikes?
On behalf of the people
What?
of this country,
How is it independent of the rate hikes? We've been raising rates for a year and a half. That's a ridiculous statement.
to prevent a recession, yes or no, Chairman Powell, will you pause future
No.
interest rate hikes?
Please say no.
We're not seeking to have a recession. And
She's going to say yes or
we
no.
need to have a recession to get price
Respectfully,
stability back.
will you pause interest rate hikes, yes or no?
I would do yes or no on pausing interest rate hikes. That's a serious question. And I can't tell you because I don't know all the facts. It's not a
Reclaiming my time, and in fact, it is a very serious question because it has a very serious implications. The people who will bear the brunt of an economic recession are our most vulnerable.
And the people who bear the brunt of inflation are our most vulnerable. I do not get affected by inflation. The vast majority of the people in our company do not get affected by inflation. The very people that she worries about losing their jobs are the very people who bear the brunt of inflation. This is exactly like yesterday's testimony, and I'm just repeating the same thing again about all of this.
We know from past experiences that recessions have catastrophic and deeply inequitable consequences. In fact, while some will catch a cold, others will catch pneumonia. But you know that. An economic cold or pneumonia. In fact, in your opening statement, you said, we will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Could you elaborate, what is this effect to communities, families, and businesses?
You know exactly what
These
it is.
interest rate hikes.
Well, right now we're trying to bring down inflation on behalf of all those families. I think high inflation is hurting particularly working families all around the country very badly. And as you know, if you're on a very limited budget and you don't have a lot of excess earnings, when prices start going up, you're in trouble right away. People, middle and upper middle class people have more resources. So we think it's absolutely critical for the working people of this country that we get inflation back under control. And also, while we're at it, we have a dual mandate.
Apologies, Mr. Chair, I'm just reclaiming my time here. Here's the thing. The most devastating impacts will be to our most vulnerable.
Same with inflation. The most devastating impacts will be to the most vulnerable.
Veterans to our most vulnerable. Veterans.
Let's go to the
elderly,
next
low-income
portion.
workers.
You have a lot of projections, economic projections, various data, various reports that are coming out. How much, and you've studied inflation, right? I mean, obviously, it's the number one priority. Right?
So condescending.
How much is inflation impacted by these three things? Corporate profiteering,
Here we go.
egregious executive pay,
Oh my God.
and use of share, stock buybacks.
Stock buybacks? Stock buybacks? To quote Warren Buffett, economically illiterate. Absolutely economically illiterate. A corporate executive compensation? Oh my gosh.
I don't have numbers, but I would say in the case of executive pay and in the case of share repurchases,
Zero.
I can't think of how it would affect inflation.
Yeah.
In the case of executive pay, that would be very small in terms of the broader economy. In terms of profits, though, the way I think about that is profits are high. The places where profits are really high is places where there are shortages and supply chain issues. And as those things get better, as they are, you're going to see inflation come down and even.
I'm a real fan of Jerome Powell now.
We'll see corporate
I don't know why.
market, that'll be part of how inflation comes.
Look at how calm he is.
So, does that corporate profiteering does impact inflation? You don't have any stats percentage-wise, how much of it?
No, it's not that, you idiot.
I really paid attention.
No, he literally said the places that are generating more corporate profit are because of supply and demand. For example, oil. But there was a time recently when oil price, go look, when I see on Facebook, friends of mine on the left who say, look at the profit on oil. I'm like, do you know how many oil companies lose money too? When oil prices are down, they're losing money. But we only pay attention, this lady.
To your testimony in the Senate hearing yesterday, and there was a lot of conversation about, my neighbors and residents' wages and so forth. They're finally starting to see a little bit more closer to possibly getting fair wages.
Fair wages. What's fair wages there?
But I don't know if the Feds is paying closer attention to monopolies, corporate profiteering, and executive egregious pay. All of it, even the stock buybacks, you're saying all of that aside, you're focused more on wages and increasing the interest rate than on those other.
Our focus is really on price stability.
Yeah, see, he literally said, okay, first off, I can't believe this. This is what I mean when I say I don't care who somebody is. This person's in Congress and they're fucking stupid. It's just posturing to her constituents. That's it. Where's this person from? Oh, Michigan. Oh no, Detroit. My homies. Oh no. No. This makes me so sad. Oh, she's not smart. Oh, Democratic Socialists, other political affiliation, the Democratic Socialists of America. I'm quite sure she doesn't need her. What's her salary now? Is it like $175,000 a year? The median income in this country is $70,000 a year. Hey, what's your excuse? You make over double what the average person makes. Oh, well, it's different. I got to fly to DC and I got to do this. It's rules for thee, none for me. That's exactly what this is. And I guarantee that if she left Congress and somebody offered her $2 million a year, she would go, thank you, I'll take it. Talk about corporate profiteering. Talk about egregious executive pay. Hypocrite, hypocrite, hypocrite. Oh God, I can't say what I was about ready to say. I'm sorry, this is done. Please, I beg of somebody out there who knows her, please send a timestamp of exactly when I called her. Just stupid. He literally said, yeah, corporate, yeah, I don't think so. Not much. And the shareholder buybacks, I guarantee if I asked her right in front of us right now, what's a shareholder buyback? She wouldn't be able to tell me. And guess what? Let's go see her 401k. She's going to make quite a bit of money. She's not going to complain about it. She's not going to complain about it at all. F off. See you guys later. Please subscribe to the channel. Thanks very much.